Beautiful sisters! Today we are honored to have Jorden to join us to the talk because we're really interested in what's the difference between the financing a car or leasing a car. Jorden is working in an auto group. He is financing manager, so you deal with a lot of leasing and financing. What's the difference between financing a car and leasing a car?
Financing a car, you're taking all of the responsibility, all of the ownership, and you're kind of splitting that between yourself and whoever you're financing with, so whoever your lender is. Leasing a car, you're going to be essentially borrowing the car for a set period of time. So the manufacturer actually retains ownership of the vehicle for the entire time that you use it. So you're just paying for your use for a lease.
Is there a down payment for leasing a car?
Generally there is. So there are going to be a lot of lease promotions that you may see out there depending on the manufacturer. All of those promotions will generally include some type of amount due at signing. And for a lease, generally the amount that's due at signing will include your first payment, and it will include any type of DMV fees and that type of thing.
Is that a percentage of your pricing for the down payments for leasing?
It works a little differently for a lease down payment. I mean, the most significant thing about a lease payment versus a finance payment is the difference in size. Generally, a lease payment is much smaller. So in order to get to that smaller payment, definitely the amount due at signing impacts that. And it has a bigger impact because it's a more compressed period of time, usually 3 years, something like that.
Can I see with the first 3 years, if you lease a car, you would pay a lower down payment and also lower monthly payment compared with financing a car?
It really depends. And I wanted to kind of touch on, there's a difference between a luxury lease, a business lease, and then general leasing. People who are going to lease a vehicle for a business, generally it has to hit a specific monthly amount that's been allotted by the corporation or that hits their bottom line that they're trying to achieve. That's a particular specific motivation. Generally, people who end up leasing luxury vehicles simply do not want to own the vehicle after the warranty has expired. The cost of ownership becomes onerous at that point. So when you're talking about just specific consumer leases, Honda, Toyota, Nissan, these vehicles, to give you an example, so we have at my store, we've got the 2020, show this to you guys, the 2020 CRV, okay? These are my cliff notes, right? So for the 2020 CRV, you've got the MSRP, which is the manufacturer's, recommended sale price. And then to lease that, they have a specific amount that you need to put down to hit their advertised lease. And this is what gains people's interest. The advertised lease is about $300 a month for a brand new top-of-the-line CRV. To hit that, you need to bring $3,799 and put that down at the time that you sign. What that allows is not only the lower monthly payment, but when you're done with the lease, if you choose to, you have the option to then purchase the vehicle. And the amount that you can purchase it for is very enticing as well. So there's a couple different things that are happening as far as advantages with a lease about financing. Definitely your monthly payment would be higher. And like I said, you're taking on all of the risk of ownership between you and your lender. So those are the main features. Generally, when you're financing, you're going to end up owning the vehicle after the manufacturer warranty is expired. So that's something to consider.
Do you encourage customers to pay a bigger down payment, either buying a car, either financing a car or leasing a car?
It really depends on what the customer's goals are. Some customers come to me and could easily purchase the vehicle with a check, right? but they may want to, for one reason or another, keep that money in a bank or earning interest or in, stocks or wherever they have their money. In those circumstances, it makes more sense to take advantage of, low interest rates and let their money work for them in a different way.
From my own experience, I bought my current car. I was offered the option whether to buy it or to lease it. At that time, leasing was still a very new concept for me, so I stick with the buying the car. Mm-hmm. But looking back, I think maybe I should have leased it because I got electric car, which is the first generation of electric car.
Yeah.
And for that reason, I think leasing may be a better option because I don't know what's the market value, reselling value, and etc.
To that point, leasing gives you a lot of flexibility for folks who like to update their technology more often. Leasing is a really good option. You're not locked into maybe a 5 or 6 year loan. Usually you can get into either a 2 or 3 year lease scenario. Once again, like you're pointing out, when there are unknown factors with a new release of something, you're not going to be there for the time when you're no longer protected by the manufacturer. In those circumstances, leasing is a huge advantage. I can tell you that for my brand in particular, after a 3-year lease, the amount that you could purchase the vehicle for is thousands of dollars less than you could purchase a pre-owned of the same year, same model, and similar miles. So there's a huge difference in the amount that you would potentially be ahead. Leasing gives you that option to either purchase your own pre-owned vehicle or to sell it privately, so you could actually realize the difference in that market value yourself.
So I think this discussion lead to another question. You mentioned that, there's specific type of car, mode of car, it's definitely worth to lease it. And also like Jesse mentioned that for like new model electronic car might be good choice for lease. Is there like a specific type of car or brand of car and then, you recommend leasing rather than financing or buying it?
Generally, any type of luxury car, you're better off leasing. And that's simply because nothing in the vehicle industry has the same depreciation as a luxury vehicle. Mm-hmm. So what you may go and purchase for $60,000, $80,000, even within 1 or 2 years, you could lose a quarter of that, right? And so when you're talking about, the amount of money that you stand to lose or value, it's significant, much more significant for a luxury car than for, a general production vehicle.
So basically the higher depreciation, the better to lease.
Exactly right. The manufacturer is still retaining ownership. And so they're essentially taking that hit, and you're just enjoying the use of the vehicle for a set amount of time.
So is the leasing period only for 3 years for electric car? If can you get to 5 years or so, or?
Generally, you see leases in the 2 year to 3 year range. Some manufacturers will allow for lease extensions. And then most manufacturers these days will allow you to customize your miles. So that used to be something that was a big consideration for people. They didn't want to be constantly afraid of going over the amount that they should drive, right? Because the penalties on the other end were pretty significant for that. Because once again, you're using a vehicle that's technically still retained by the manufacturer. So these days, there's a lot more flexibility with structuring miles to allow for vacations and traveling and whatever you may want to do as it fits into your life.
When we were buying our cars, actually 3 cars, we did a lot of negotiation. We did a lot of bargaining. Mm-hmm. So when you lease a car, can you do the similar negotiation on a price or monthly payment? How much is the room for negotiation?
Yeah, so it's going to vary from manufacturer to manufacturer. Generally, if there is a promotional lease rate, so they're going to give you what's called a money factor. So it's similar in function to an interest rate, but it is different. That promotional money factor is based on the structure as they've already designed it, meaning whatever discount they've already applied to the list price of the vehicle has already been figured in. If there are any manufacturer incentives, those have already been figured into that. Generally, that's pretty set in stone for a lease, but generally the manufacturer is already taking advantage of that to your benefit, because once again, their purpose for that is that, especially these days, it's a culture of payments. People are used to making payments, right? Most people take it for granted that they're going to have a payment for a vehicle, they're going to have a payment for a cell phone, they're going to have a payment for their entertainment in the home. You know, payments are kind of how we structure our lives. And so if a manufacturer can offer a payment that's attractive and offer you more vehicle than you would get, let's say, if you were financing. This is another thing to consider. If you were to finance with a promotional rate, a new CRV, once again, going back to that example, you'd be right around just under $600 a month. And that's at 1.9%, right? So using their incentive rate. Whereas going through the lease, you're closer to about 300. So from a payment perspective, from that mentality, the manufacturer wants to use whatever tools they have to make it as attractive as possible. Right? Nice thing that I didn't mention about leases, and that's, you know, in my position, I see far more people, unfortunately, coming through to purchase new vehicles because of accidents, because of totals and wrecks and things like this. A lease has built into its structure what's called gap coverage. And so that's something that definitely, unless you're paying cash or unless you're putting at least a third down when you're financing, you are definitely vulnerable to somebody running into you and totaling out your vehicle. And these days, it's never been easier to total out a vehicle because the cost of labor and parts is so high. Most insurance companies, it doesn't take much to consider a vehicle a total loss. So that protection is built into the lease. And once again, that's the manufacturer looking out for itself and still trying to keep it as attractive of a proposition as possible.
So would you please further explain the policy?
So, yeah. So the specific policy is called gap coverage. It's guaranteed asset protection.
Wow.
And basically, this is a policy to cover the difference in what an insurance company would pay versus the amount still outstanding for the vehicle. So let's say, you know, in the instance of a lease, once again, you're making lower monthly payments. You know, there isn't quite as much equity built into that purchase. So if the vehicle were totaled, the amount still owing on the vehicle would be significantly more than the insurance would be willing to pay. Gap coverage does is it covers that distance of what's owing on the vehicle versus what they're willing to pay. And for financing, it's something that's never included in a contract. It's something you would have to purchase in addition, and usually it would be offered by someone in my position. And it's highly regulated by the state. So, you know, it's not like dealers can charge whatever they want for that. It's actually determined by the state what that coverage can cost. Because once again, like I said, since the manufacturer still technically owns it, they want to make sure that they get fully recompensed if anything happens to it. You know, if you're financing, like I said, if you put at least a third of the amount financed down, you don't have to worry about gap coverage. You've essentially protected yourself with enough instant equity in the vehicle to where even if you were totaled, your insurance company should pay off the entire loan. Now, for folks, there are a lot of people who come through, they have 850 credit scores. They're very secure, and they don't feel like putting anything down. What they don't realize a lot of time is that they are opening themselves up to having to pay whatever that difference would be. They absolutely will qualify for a zero down loan, but that has nothing to do with the eventuality of somebody running into them, or even, sometimes it's us ourselves, taking their eyes off the road for a second, and sometimes that's all it takes. So
before ending leasing a car, what should we know before we return the car?
Generally, your manufacturer will reach out to you about 9 months to a year before your lease is up. And they will let you know that, you should be thinking about what you want to do. I had mentioned those options before. I mean, you have the option to turn the lease in and simply walk away from it, which is nice. You have the option to sell the leased vehicle privately for whatever the market value will be versus whatever your residual value that you would have to pay to own it, right? And you can then take that difference. Or you could trade it in. You always have the option to also trade it in. And so they will be reaching out to you to kind of get you thinking about what you want to do next, because one way or another, you have to do something at the end of the lease. The other thing is most leases have a certain kind of small amount of wear and tear included in there. But if you know that there are, significant damages, or if the vehicle needs tires or different things like that, you're going to want to replace those on your own. Because if the manufacturer takes it in and they're going to probably charge you more than what you could replace it on your own for. The protection against that is, as a finance manager, there is a product that I sell that guarantees you the ability to simply walk away, rather than having to fix dings, dents, chips, stains, tears, replace tires, anything like that. There is a product that you can build into the lease that completely covers that. And,
is it expensive?
It's not, actually. I think it's close to about $600 or $700 in that neighborhood. That in and of itself would generally be a set of tires, just a set of tires, right? So anything in addition to that could potentially be additional charges for you. And then, of course, the main beauty of the lease being that the manufacturer is footing the bill for any mechanical failures. It's best to kind of bring those in as they occur, as opposed to, bringing the vehicle in at the end of the lease and, I've noticed it's been making this noise, or, my infotainment system is just not working, or whatever it may be. And, these days, by far, once again, especially for my brand, my customers don't really worry about the engine or the transmission. A Honda is not going to leave them on the side of the road. The things that we're seeing are the electrical components that are giving people issues. So, and I think that's pretty industry-wide. There's been much more demand for connectivity and these types of things in the last 10 years. And everybody's kind of dealing with the repercussions of that.
So to clarify on that, you say we need to add like a $600 to $700 to the product. Does that mean like divided by 3 years? That means like a $17 per month, right?
Roughly.
Roughly, okay.
Yeah.
It's not like a monthly $600 additional.
No. There are single pay leases. So I'm not sure if you guys are aware of that. They're less common, but essentially you can pay a lease and have no lease payments for the remainder of the 3 years. And then at the end of the 3 years, you would still follow the same format of either selling it or turning it in or trading it in.
That's good to know. Is it
something for me?
Wow.
Yeah.
So is it a better deal compared to that monthly payment?
It's equal.
Okay.
Yeah. It just gives you the freedom of not having to consider a payment for the next, set number of years, however you structure the lease.
Good to know. Yeah.
Can you summarize the benefit of the
Thank
lease
you.
car and then give us like maybe
convince us why we need to lease.
It's definitely advantageous for people looking for the newest thing. If you don't find yourself being comfortable in a vehicle after a few years, you tend to lose more money by trading in a vehicle that you financed as opposed to just turning in a lease, right? So you're going to have newer technology. You're going to be able to be in a newer vehicle more often. You're not going to have to worry about significant repairs due to failures on the vehicle because it will be covered by the manufacturer's warranty. And you have that freedom to essentially, at the end of the lease period, walk away and start fresh. These days, leases tend to be pretty advantageous just based on the culture that we have, which is a payment culture, right? So you're going to be paying less monthly. You're going to potentially get more vehicle. So maybe you're still comfortable with the $500, $600 payment, but now you can get the top of the line offered as opposed to getting maybe a lower trim level with fewer features. So these are some of the main benefits of the lease.
Okay. Thank you so much for Jorden to give us a lot of tips, on how to lease a car. And then if currently you are thinking about either buying a car or leasing a car, and then I hope you can learn some tips from our talk today. Thank you. Bye.
Thanks.
Thank you, Jorden.